What is an ETF? By definition, an ETF is an exchange-traded fund. This investment fund holds stocks, bonds, or other commodities and trades on an exchange like a stock. So in other words, buying one share of an ETF is like buying multiple different stocks in one. For example, if you buy one share of S&P 500, of that one share, it's 7% Nvidia, 6% Apple, 6% Microsoft, so on and so forth, all the way down till you get to 503, which is 0.01%. The reason why you buy an ETF is because you want to diversify your portfolio. You want to do this especially when it comes to retirement accounts. For instance, if you have a whole bunch of money in Apple and Apple goes down, now your whole retirement fund is out the window. Whereas if you buy a whole bunch of shares of ETFs, if one individual stock goes down, it's not going to hurt your portfolio too much. Here's a list of alternatives that I personally have that I recommend if you want to buy more than just the S&P 500. First, I recommend Vanguard Total Market Index Fund or any total index fund because different companies offer different ones. Here's the top 10 companies by weight and fund. Next, you have NASDAQ 100, which is an ETF geared towards more tech and startup companies. And lastly, you have the Dow Jones, which is geared towards more blue-collar companies that have a consistent growth. Regardless of which one you prefer, it's always good to have many different ETFs in your retirement portfolio. This will allow for maximum diversification of your portfolio. Like and subscribe for more tips.